Morning guys, hope you're doing well. Purpose of this video is to share with you where I find the money to be able to find the real estate deals that I buy. So I'm out for a little walk this morning, just thought I'd share some thoughts with you. Place number one that I find money is from banks. Banks will give you 70 to 80% of the purchase price of a piece of real estate as long as it cash flows. And as long as you have some decent credit, okay? Number two, is I find money from sellers, from the people selling their real estate. So if I go to buy a piece of real estate and let's say the purchase price is $100,000, bank will give me $75,000. I still need $25,000 if I don't have that in my bank account. So I can go to that seller and say, hey, Mr. Seller, will you give me $25,000 to be able to buy your property? Now, I'm going to do it where he lends me the money in second lien position. And what that means is if I were to default on the mortgage, and banks always look at worst case scenarios, if I default, the bank would get their $75,000 first, and he or the seller would get their $25,000 in second, okay? And so they're in a higher risk position. I hope that makes sense. And you say, well, why in the world would a seller do that in second lien position? Well, the reason they do it is if they're motivated to sell their property, maybe they've got to sell quickly, maybe they've been on the market for a long time and nobody likes it. There could be a number of reasons, but a lot of times I'll get money from sellers. And a quick little tip for you, it's kind of funny. You can actually overlap these loans sometimes as long as the cash flow is strong enough from the asset. So you could get $75,000 from the bank, and you could get, say, $35,000 from the seller. And when you go to settlement, you actually walk out owning the property and having a check in your pocket. So that's kind of cool. You get to own a property, get to cash flow it, and you'll be able to have some extra money in your pocket to be able to maybe deal with reserves or to deal with repairs and things like that. Okay. Number three way to find money is through what we call a hard money lender or a private lender. So what that means is there are people that want to lend money at a higher interest rate, granted. Typically it's at a higher interest rate. And they want to lend money so that on real estate. Now, you got to establish a relationship with someone up front. You have to know about them ahead of time. And they will typically give you 55 to 60% loan to value on the property in first lien position. So that means if you're buying a property that's worth $100,000, hard money lenders will give you $55,000 or $60,000, and a lot of times these are liquid funds, and so you can close the next day or the next week. So these funds are very, very liquid. They're usually higher interest rate loans, and they're usually interest-only payments. And so this is a short-term play. So if you buy that $100,000, let's say there's a $100,000 home that you want to buy, and the seller needs to sell tomorrow, and you say, well, Mr. Seller, the best I can do is give you $55,000. You could go, but we can close tomorrow, or we could close the next day. So you go ahead and buy that property for $55,000, and then you can, a year from then or 6 months from then, you can go to banks and you can say, hey, look, I have this $100,000 house, but I've got a $55,000 mortgage on it. Can I refinance? And that's how you would get that, pay off that private lender. Or you could flip the property. A lot of people flip properties that way. So they pay $55,000 for it, they settle on it, and then they start marketing it for $65,000 or $75,000 or $85,000, whatever you think you can get in the open marketplace. No rules on this. It's just whatever a buyer or seller can negotiate. And way number four that I get cash for my deals is I will bring partners in. So I will go under contract on a deal, and then I'll start pitching contractors. I'm sorry, not contractors. I'm not sure why I'm saying contractors. I will start pitching investors or other people that may want to get into real estate. Maybe they haven't been in real estate yet and they were thinking about it. And so what you can do is you can go under contract, and then you can go to partners and say, hey, look, I have this $100,000 house. I'll split the deal with you 50-50. You give me $25,000 cash, and I'll manage the property. I'll take it to contract. I'll form the LLC. I'll take care of all the loose ends, and I'll just write you a check every single month for whatever the property cash flows. Now, they got to understand there's some risk, and you've got to be able to spell this out to them. But yeah, investors will give you $25,000 if the deal looks good, and you have your 25 grand. The bank gives you your 75,000, and away you go. Very little money into the deal, if any money at all. So those are the 4 main ways, and I can go into a lot more detail, maybe in some other videos, on how you can be able to get each one of those things. But I wanted to let you guys know, I personally own about 70 units, $4 million worth of real estate, and I've used all 4 of those methods to be able to buy properties. So hope that helps, guys. Have a great day and keep moving forward.